Greetings. What we want to do is go over some transactions, applying the knowledge that we've learned so far, maybe learning a few things new in the meantime. So it'll be more or less a reinforcement plus some new information as we go along. First, we're going to do a transaction that is on the receiving side of income. We'll do a few of those, and then we'll do some expense sides. Here is money received for a booklet to write. The first thing that should come to mind is, how should the debits and credits look? Well, I'll give you the first part. That's the easy one. And you would figure out that the credit would go to, yes, revenue, but what kind of revenue? Revenue to where? And if you're thinking like in terms of temporary restricted assets, you are thinking correctly. So that's how this entry would start, and as the transaction goes along, we would have things like expenses for the transaction itself, and they would be of a variety. They'll all total up to $15K, of course, and it'll take cash to do that. And at some point, as this is occurring, we're going to move the temporary restricted $15K to revenue for the unrestricted assets. The expenses will show up in the unrestricted asset column. That's where these all will be. And so this will work out perfectly once the booklet is done. And the expenses from the temporary will be moved over as they occur. So this will be in real time. So if we spend 7.5 in year one, 7.5 in year one will be moved over from the temporary restricted to the unrestricted. And then we spend the rest of next year, and the other 7.5 will be moved over in year two. Another thing to point out would be that the expenditures will be broken down into various categories. There'll be your direct expenses, and then the overhead will be in each individual natural expense. For example, utilities, rent, phone. We've talked about these things, we've gone over it quite a bit. They'll all be accumulated, and at the end of the year, then what will be happening at that point is the accountant will then allocate of the amounts in these overheads, they'll allocate to the booklet. So you would get the total expense, including direct and the overhead amount. And it'll be allocated based on, again, the drivers that we've gone over. This is not the time to go over that since we've done it before, but I just want to point out how the books would probably be handled. It would be unlikely that we would allocate these in real time towards the booklet, probably done by journal entry at a balance sheet date. Okay, so that's basically what happens there. Also, one last thing, we won't spend a lot of time on it in this series of lectures, but to let you know that the cash flow statement will merely show the cash as it comes in and goes out. So the year that the monies from the donor for unrestricted, for the temporary restricted funds come in, when they come in as temporary, that's when the cash will show. And as the expenses are incurred, that's when the money will go out. One more thing to point out, as again a way of remembering and refresher, is that the $15K is possibly restricted for only direct expenses. Could be that the donor said only for the direct cost of the booklet, in which case the total cost of the booklet at the end of the day will be higher than the $15K. It will be greater than the $15K because of the allocation of the overhead. That would not be unusual that the donor gave the money in that fashion. Of course, it's the organization's right to ask the donor to be a little bit more liberal and allow for some overhead, because after all, overhead has to be paid and incurred. And if all donors gave for only direct expenses, the entities would have a severe problem of continuing along without having the ability to fund overhead. All right, let's move along. Let's see what we got next. Okay, the chairman or the ex-chairman of a board bequeaths $100,000 to increase our endowment fund. And of course, here the point would be it's $100,000. That's nice. He actually gives us this $100,000. He did it through bequeathing. I think that means he died. Okay, and of course, this is going to go to the permanently restricted assets. Okay, so if you got that, then you really are rocking and rolling along now. Okay, let's see. One thing here, knowledgeable friends contribute needed professional services. All right, so as a refresher, we did learn that when services are donated and they are of the type and caliber that we otherwise would have had to pay for, we wouldn't have expected the organization to get these types of services donated. It's not normal. Then when this does happen, and they are definitely budgeted items, they're items, so it's not just not normal, it's items that are not normally donated or so I'd say not normally donated and or items that we definitely would have budgeted for. And accounting services is like that, legal services, costs of buildings, assets that are of a substantive nature. That's what falls into this category, and so the entry here is going to be, I'm going to erase some and make some room here. The entry here would be, of course, the cash for whatever it is, but the debit would be to the type of expense. Well, the credit's not cash. Obviously, the credit's not cash because it's donated. So the credit is, I'll leave that for you in a minute. The debit would be to the type of expense it's for, which could be for accounting services. And the amount that's going to go in there is the value, the fair market value of those services, what they otherwise would have been billed. Here's the credit. Could also have been to a fixed asset, if that's what it was. Sometimes a builder will donate building or donate equipment, things like that. And so the debit could have been to the fixed assets. The credit will have been to, that's right, revenue, contribution revenue if you wish, contribution revenue, and so the net result is that when the revenue so contributed by a volunteer contribution, there is no net effect on the bottom line. After all, look at it. There's a credit for the amount here and a debit for the amount here, so the bottom line is not changed. In the event that the revenue is contributed services or contributed fixed assets, so initially there is a effect to the bottom line where the bottom line is increased by the revenue, but over time through depreciation and amortization, unless it's land, over time the wind-up is that there is a matching between the revenues such that an expense will be incurred on the statement of activities and will get a no effect on the bottom line as well. However, if it's land or some other non-amortizable, non-depreciable donation, then that won't happen until it's sold, basically. Okay, so what have we got so far? Well, we've got a lot of entries here. Basically, once again, let's make some room, and it's basically the fact that volunteer services are recorded at the fair market value of both as revenue and expense, generally speaking, so it has an offset. The donation, the revenue account, will be most of the time, in fact, I think all the time, I'll talk about it in a second, to the unrestricted assets, because it's being used right away for the expenditure which it otherwise would have cost the organization money. One more time, let's just go over it, why that is. The accountant is donating services, so it's an accounting fee that's not going to cost the organization any money. So it's an immediate expense. That's the value to the organization. The revenue has already been incurred through a donation, not as cash, but through a donation. This is the fair market value, the 500. According to the controllers, that's the fair market value for it. No effect to the bottom line. fine, no problem. And as a result, you've got what really is all under unrestricted because the expense is unrestricted, as all expenses are. And so this will be considered unrestricted net assets as well. It's already occurred. Okay, rolling right along. What about regular volunteers for, let's say, a fundraiser? Everybody comes out, does a barbecue, people bring food, people bring games, people wash cars, all for the purposes of a fundraising event, or the people are involved in the community in helping with the mission. Maybe it's cleaning up a river or cleaning up land, and they're all out to help clean up. These are all great volunteers, wonderful people, people who have come from all walks of life, professionals and blue-collar workers, and you name it, housewives and working women CEOs, it's everybody. But the type of service that they're volunteering for is not of a nature that would be considered to be a budget item. This would be this would be volunteerism in its most classic case, the expected type of volunteerism that America, amongst other countries, but certainly America is known for, where people in the community come out in order to help others or help the community at large. And so these would not be debited or credited. There's no entry for these kinds of volunteer activities, because we can't say that, it can't say first it's a budgeted line item that we would have otherwise paid for. It was expected that that's what the organization would do, or it's not of a value that we can definitely place on it, and so the judgment would be that this is not for budgeted expense items of a professional nature. This is for helping the community, fundraising of the organization, you name it. And so we would not do this grassroots volunteer effort as a journal entry. I use the word grassroots. This is a grassroots volunteer effort by the community. And that expression to me means that it is not necessarily requiring certain skills or professionalism from the people who are donating their time. It's merely donating their time. Setting up chairs in an auditorium is an example of that. You could argue that we might have to set up chairs, but it's normally done by volunteers, or it's done by volunteers in the case where it's just, they're trying to help the organization reduce costs, and it certainly wouldn't have been a professional cost, so we won't book that. That's not a clear line there, and that's, if that's what you're getting out of that, and that's true. So there's some judgment that goes into these decisions as to whether you book the volunteer value or not. Okay, we'll pause here.